Well, the minutes should be coming out. We just consolidated here between the 67s and 70s. See what they have to say. Market sort of died here.
Despite those earnings concerns the market we were just talking about, we'll give you a complete recap of all of that in just a moment here.
And in case you hadn't noticed it, I know you watch this very closely, the VIX, the volatility index.
CNBC's not even covering the minutes. Wow, that's surprising.
So it seems as though the fear factor is fading, and then if that's the case, how do you make money in options?
Unless I have the time wrong.
Also, a new survey says
yeah, maybe it's 1400 hours. Yeah, 2 o'clock. Not 1 o'clock, it's 2 o'clock. So, there you go. We'll just wait till 2 o'clock. Well, there's a little activity. We got down around 65, and now we're up around 68. A little bit of positive delta volume coming in the last 20 minutes. That's interesting, especially before the minutes. Somebody knows something, maybe. Who knows? But the sentiment has definitely shifted on the NYSE. The moving average is going higher, and if this is actually a shift or just a rotation is the question. Well, if it broke out over the high at 70, I say the high, I mean the high of just the last upward rotation at 69.75, then I think 76 would be a reasonable spot to see if any volume came in for a short. That would be the area that I would look to, maybe, potentially. I don't feel like jumping aboard with a long right here, anticipating anything positive. I'd rather see the news come out, see a rally, and then pick my spot at a cluster for a short. Let's see if there's any action.
Fed minutes crossing at this moment. Steve Leisman in Washington with the headlines. Steve.
Yes, thank you, Aaron. We are learning from these minutes from the March 18th meeting that the Fed has a worse view of the economy than perhaps they let on. The Fed staff and many members now see at least the conventional definition of a recession in the first half of 2008, where the staff has dialed in 2 quarters, or at least a contraction over this period. We heard from Ben Bernanke last week that a recession is possible. We did not hear that that was in fact the forecast of the Fed staff, and the minutes show that many members of this idea.
So we're short of 65,
will be moderating as the year goes by.
We'll put our stop
the setting policy is difficult right now
above
because the inflation and the growth
at 70, 70 and a half, somewhere around there.
Remember, there were those 2 dissents. We're learning that Dallas's Fisher and Philadelphia's Plosser dissented favoring less easing because they were concerned about, they both cited the heightened inflation risk. Now, some Fed
there's a divergence in the XLF, absolutely.
By the way, of the meeting where they set the
we're building a lot more negative NYSE tick, so we'll see if we can continue the momentum here.
Treasury auctions out there. Some were concerned that they feared setting a precedent with this, and that the result would be that markets would expect even more action. Well, they got it after they did that TSLF. So, Aaron, I think the story here is that these guys think the economy is maybe a little worse than they've let on in some of their public statements. Aaron?
All right, interesting. Steve, thank you very much. Steve, going to be staying with us.
Let's see if that news release has any negative effect on the market, or if everybody buys the market here.
He is John Evans, CEO of Atlantic Central Bankers Bank. John, wanted to give you a chance to react to the headlines Steve just shared.
Well, Aaron, I think the whole ballgame has changed since March 18th. Since that time, we've had some pretty tough economic news, including the job news last week. But more importantly, the Bear Stearns, the 96 hours. I think this Fed now has faced the stark reality that the bulk of the recovery is upon their shoulders. If we take a look at what the Fed has done over the past 6 months, they've lowered the Fed funds rate 300 basis points, the discount window by 350, expanded that to 90 days, created the term auction facility, expanded it to $80 billion. The term securities lending facility is a new facility to swap out collateral, and also the liquidity facility to the primary dealers.
Lots of facilities, huh?
Outstanding job.
I guess they can just create new facilities anytime they need them.
What do you think about one of the headlines Steve just shared here, though, which is that they're still banking on a second half recovery? Is that becoming a little ridiculous?
Yeah, I think it's a little positive at this point. Now, they didn't have the chance to see the job numbers, but we're continuing to see some bad economic news. And if you saw the IMF release their report, they're projecting up to $1 trillion in losses globally.
That's our action right now. We're sitting at 66.50.
Today,
not moving much really.
Have already been written down, with another 80 to be written down soon. But that's half of the 565 billion. So we're not through the subprime mess, and we still have to go through the commercial real estate problems that face us also.
Right, we're going to have a whole lot more on that in a couple of minutes. So Steve, can I ask you a question, though, since I know you're going to be talking to Alan Greenspan? What do you think of John's point that Ben Bernanke's Fed is doing an outstanding job?
You know, I wouldn't comment on it that way. Because of the position I have in covering it, I think they've done a lot of things that we've never seen before. I'm interested in a couple things that have been said in these minutes, though, Aaron, that some members fear a more severe and protracted downturn than is currently forecast. I've not heard that. I'm also interested in the idea that the Fed chairman was in front of Congress last week saying a recession is possible, but now it has become the baseline forecast of the Fed staff. I'd like to know when...
I'm not sure what to think about the market just stalling here.
Perhaps you should have let on that there were more concerns.
We're going to stay with this trade, though.
The economy than just recession being possible.
But Steve, at what point do we start to have a more, let's just say, transparent discussion about the second half out of Washington, whether that be the administration or the Treasury Department or the Fed? Everyone's still saying the second half's going to be
still
great.
significant divergence between the XLF and even the S&P. NYSE tick chart, though, is oscillating around the zero line.
Questions, and they're actually raised in the minutes where the Fed staff discusses this idea of the stimulus unwinding, which sets you up for one thing that's been out there among forecasters, which is this
break below the 8 period low here,
where you snap back because of the interest rate cuts.
8 period opens up in 25 minutes.
And then you
But it
snap
could just
back
be a
down
pause
because
here.
there's nothing there to support it if we don't get the financial system back on track here, Harry.
John, what would you say about the status of the financial system right now? You're the doctor, you're coming in and giving a checkup simple here. A lot of people
I think if we
want to
start
say
to break
credit
down,
crisis is in the rearview
we could
mirror,
have
at least for the
momentum
majority of
coming in as we
people.
approach
Know
the
what
57
damage might
area.
be. Is that true, or is that too Pollyanna as well?
No, I think we're headed for some tough times, and I think that what the Fed now has to wrestle with is they're looking at a Fed funds rate of 2.25. They have 8 meetings during the year, and they've got to make sure they have the powder necessary. So unless we see some really big shocks, I think we're going to see some gradual 25 basis point decreases over the next few meetings.
All right, thanks very much.
We'll pause the video here. Well, we're starting to see some continuation to the downside. Now we'll look for the 57s. 60s might be a resting point, but I'd like to try to stay with it a little longer than that. K period's about to open up in a minute or so. We're doing a little retracement here. Have a lot of volume down here in the 62s. I didn't particularly like that, but we did not quick enough to get out of that. So we're up at the second standard deviation. The NYSE tick is building predominantly negative values over the last several minutes. So we're anticipating a move down in K period to the 57 area. Our stop is, I have it at 70.50. That's probably the right stop, although it doesn't feel comfortable, which probably makes it correct. If I put it too close with a 65 entry, our trade location entry isn't the best, you know, considering we didn't really have any fake direction of movement before the volume started to come in the 60, 67, 66 area, and by the time we got filled it was 65. So I think I'm going to keep everything status quo, and hopefully we don't get I could probably move the stop down to the J period high. Actually, the J period high is 67.50, the I period high is 68.50. Let's move the stop down to 68.50. I think that's reasonable. If the K period gets over the J period, then there's a good chance we're just going to vacillate between the value area. We should break down in the K period here if we're going to make lower lows. Makes sense a little bit. We're going to take the 64.75s. I don't like the way this K period's acting here. Out.
P.S. Do you use
what a tragedy. God. All that excitement waiting for a breakdown and we make a point, if that.
Piercing the head of the cock must be painful. Oh. I had the head tattoo.